Hi everyone. Let's get those screens up and say bye to that image. Let's take a look at our screens here. Welcome. I am in downtown Tokyo. It is what time is it? Hang on a second, It is 7:47 in the morning. And we are starting our market kickoff. Hey, a little bit of news. First, we've got charts are set to gap down, and that's not great. I've got the put walls. What I did for us this week, I made those numbers really big so you can jot them down. Super easy. And what we want to talk about is what's actually going on in the market. So a couple of things. The big call wall positioning right now is at 68.50, but the JP Morgan call wall is at 7,000. Now, for many of us who've been watching options markets and stuff like that, we know that JP Morgan collar is something that a lot of people watch. And so they've still got some upside pressure sitting there. Our put wall also raised up to 6,800. Now, here's the rub, and we're starting with the 4-hour chart here in the E-mini S&P because it's hitting a critical zone. So right now, the futures are telling us that we've got about a 73-point gap down here, which is not insignificant. It's a little bit over 1%. Let me see if it's shifted. Hang on 2 secs. Let's go here. You can find this information from Bloomberg. It popped up in Japanese. That's hilarious. Okay. You can find this information on Bloomberg if you go to the Markets tab. You can see, hey, futures are set to gap down. And so we've got the S&P set to gap down a little over 1%. The NASDAQ set to gap down 1.69%. That's about 390 points. So not trivial, not trivial. And so the important thing for us to remember is that we are gapping down into a space that could very easily end up being support. So what I want you to think about as you look at your charts, remember, seasonally, from a seasonality perspective, these areas between 12/12, that's December the 12th, and about December the 17th can tend to have lots of ripples. And so if this price is actually doing something like, if we're creating a megaphone pattern, right, we can see upside pressure here, we're making higher highs and lower lows. Recapturing the edge of the megaphone is going to be super interesting. If this gaps down to where we might easily find support, I would say structurally, we're going to start to eyeball a trade at around 67.50. If it, obviously I'm not supposed to breathe saliva. If it happens to lose the support floor at about, what's that number? You know what? I want to make this a little bit smaller. I'd say about, this is the heavy congestion, 67.35. That'll be the next zone that we would want to watch for price action to give us a hold. All right. I've drawn the boxes out. Well, we'll talk about those boxes right after I give us a broad review of what's going on. So we take a look at the NQ, same sort of thing happening. although it's not hitting a ceiling. We know from last week I talked to us about rotation. Here's something very interesting. Look at where the big call wall for the monthly options expire. This is the number they're looking at, 24,500. So next week is options expiry. It is going to be the largest options expiry on record, but the end of the month, that 28th or whatever that weekly option ends on, is also going to be fairly dramatic. So that's very likely going to be the tilt that gives us the upward flow. For those of us who maybe are, is rollover still going on? Yes, because we still are in the Z contract here. What we want to see is the volume increase overall. And so we're still in rollover, yes. So here's the thing. The end of the month is when the Santa rally normally appears. It appears actually after Christmas most of the time. And that's because of general flows in the market. And so that's really what we're going to be staring down between December 26th and January 2nd, 3rd. That's when we're going to see the Santa rally. But I'll be with you for all of those. I'm in Tokyo for a month, but we'll still be doing these. This one is not too bad, right? It's like 10 of 8. I got up at about 4 to start marking up the charts and doing that stuff, getting ready for us. I'll be on TopstepTV on Monday at 1 p.m. Central. That one is a little bit more hazardous to my health. It's a little earlier, but it'll be all good. We're great. The big thing for us to realize is that folks are still piling in on these dip buys. But in the NQ, we have a put wall that's very likely to get broken. If we gap down that 390 points, it's going to put us underneath 25,000, really closer to 24,008 and some change. And so we're going to stare these wicks down here to help us. The 0 DTE call wall is above us at 25,375, and the big put wall and the 0 DTE put wall are in the same space. Let's go to micro Bitcoin. Super interesting here also. Look at where the call wall is, 80,000. 0 DTE call wall, 92,000. The 0 DTE put wall and the broad put wall are all sitting at 90. Micro Bitcoin is breaking this level right now. Bitcoin is breaking this level. And so if it does rotate, 84 might be the next bet of where that is. So we're going to watch for that very carefully. Let's go to nat gas. Really want to talk about this one in generalities. The call wall at 5. This call wall has been much higher in times past, but here's what's happening. For those of us that go, this has been very cold weather. We really, it's chilly here. It's in the 30s, but everywhere it's been pretty cold, except for maybe the British Isles, because they have the trade winds affecting them, and that's part of maybe some La Nina effects, and not for positive there. But here's the thing. Nat gas is going to fall into an area that is going to be very similar to the rotations in oil, because oil is being suppressed right now. Pull out the tinfoil hat. Yes, there's suppression going on there. And the moment that ends, we're going to have ourselves a bounce. This is a pretty critical space in nat gas. And so for those of you that are like, hey, I want to go long, this is a pretty good area, but it's still far below where we're sitting right now. So expect that one to fade simply because oil has also got a gap down. The gap down for oil sits somewhere around 57.10, 57.30. We'll see what happens there. Momentum is kind of flat. The big put wall for oil shifted down into 55. The 0 DTE put wall is 55.75. The 0 DTE call wall, I will definitely explain that. The 0 DTE call wall, 58.50, and the big call wall is 60 for those of us following that space. Just so you can keep your eyes on it. Let's lastly look at gold. Now, I said when we hit the last high, I was like, gold has made its high for the year. And now the market could make a liar out of me here. Okay, this one's set to gap up just a bit, but the 0 DTE call wall is 44.25 and the regular call wall is 4,400. The put wall is 42.90, 0 DTE put wall, and the big put wall is 41.50. Super important. Whoa, shucks. Here's the last one I want to go through. Silver. Now, I know a lot of us, which one did I do? Micro? Silver? Yes. A lot of us have been thinking to ourselves, oh my gosh, silver's great. I have to tell you something. It hit the call wall, 64.50, and fell like a stone on Friday. Here's what silver has a tendency to do. First of all the options data underneath shows them trimming back in terms of their bullish projections. And so I would suspect that dip buying is going to start failing in silver. Now, of course, I could be wrong. I don't have a crystal ball, or at least it's not shined up right now. But what's important for us to realize, I shouldn't have made that joke. I don't have a crystal ball. So what's important for us to realize is that this fierce rejection at the call wall from last week is telling us a story. All right. And that story is cool your jets. We've broken the VWAP, the anchored VWAP I've got on every single chart. It's the Fed, the FOMC release, anchored VWAP. And so if we're sitting under that, bounces are very likely to fade. And so I just want you to be careful if you're trading silver and expecting it to go off the rails to the upside. I would say maybe not so fast. Maybe watch for it to pull back into old areas of support before coming forward. All right, market's about to open.
The market is open.
Ta-da! Okay, so let's look for where that, let's go at a 5-minute chart. And, okay, that's very interesting. It cleared out everything off of the edges that showed us this wall way down below. That's very interesting. Everybody pulled those orders. Fascinating. All right. So let's take a peek. That's amazing that that got unwound so fast. Hold on a second. I'm going to recycle. That's very interesting. Okay, so let's stare down what's happening. First of all, what do we want to... Oh, somebody being snarky. Hey, I'm just reading the Bloomberg channel, okay? So, Mr. Anti-Trader, 69. Yeah, so what they did was shift very quickly That's pretty unusual, but here's what we've got. A spike up, so we get to decide where price action goes from here. So here's what I like to do. Let's start with the ES because I will trade that more often than the NQ. All right, so let's move it up here and look at where the anchor, I anchored the VWAP in a couple of places. This is super important for us. And then I'll talk about what's going on with the call wall. The first thing that I did was anchor the VWAP at the FOMC, right? That's this pink one. Then I anchored the VWAP on the 30-minute low, but you can pull it back and go, hey, let me get the low of yesterday. It tells you why there's a fight here and why price action is going to have trouble. Now, this is really interesting. Notice where price action's coming in. First 5 minutes. Friday's highest volume candlestick is this one right here. So here it is. The buyers are going to try and hold that edge right there at the first pass. And depending on how strong the sellers are, it'll give us some information here. So if you're a scalper and you're saying to yourself, hey, I want to buy this, this is going to be the first area that they'll bounce, right here at the 68.25. If you want to see price action formulate, you can go to a 1 or a 2 minute and watch it try to hold the floor. But do you see how there are buyers that just came in right at that spot, almost at that edge, trying to hold that formation event? I don't quite like that just yet. I'd like to see them frame out what's going to happen, especially since I saw the broad formations tell me that we had ourselves a bit of a gap down. So I'm going to be watching for the failure to hold that opening tick. That's going to give me a pretty good edge on what the price action event is going to look like. Okay, so they're trying to hold this floor. If you're saying to yourself, I want to buy that, you could use a tighter time frame. You could wait to the end of the 5-minute candlestick, all of those things, but your stop should not be lower than 68.24, simply because that's where your support floor is. And if they lose that edge, they're going to head to the bottom of the box, right? So again, how'd we do this? I went to a 5-minute chart and I said, let's look at the high-low and see how they hold the highest volume event. Now notice what they did. They cannot get, here's the first 5 minutes, they can't get above it. So rotationally, it tells us it should drop into 68.21 and potentially 68.16. The long action event does not occur until it's back up over 68.30 is my supposition. Okay, someone said, hey, Emery, what's up with the call walls? Can you explain those over again? All right, so here's the storyboard. Walls like these are created from option chains that are pinned to the SPX, okay? The futures options also carry them, so there's a little bit of a squish, but what it tells us essentially, it gives us a range of motion for where, thanks Bruno, it gives us a range of motion for trading action, and it's caused by traders that go out and sell an option at the 68.50 strike. They sell a call there, and they sell a put at the 6800 strike. So their thought process is, listen, as long as price stays in between those, I'm going to make money. All right? What that forces the broad market to do is sort of sit inside of those ranges, because there are so many people that trade options, because options provide less risk and more leverage, generally speaking. That's not 100% true, but certainly that's what we're staring down. All right, so if the supposition is correct, then what we can do is say, hey, let's try and sell one at any kind of bounce that comes into the top of this 5-minute formation, right? We're looking for the bounce. Notice the next place it's going to go, 68.21, and then the rotation downward sends it into 68.16. This makes much more sense because of all of that price action that I saw beforehand saying that the market was going to fade. So this makes seriously way more sense. All right, so I'm not so freaked out about that. That being said, we could try the bounce here. Notice old resistance, potentially new support, but we'll go down here. And then this is the low at the 6800 area that I anticipate that we could easily test. All right, so we're going to put a sell order there. Do I want to put a buy order down here? I do, but I'm really not sure it's going to hold, right? Ultimately, I do expect dip buying, but today feels kind of yucky. So here's what we're staring down on the NQ, right? We have the gap down coming into this old support zone of 25,148. They're going to try and buy that dip. It should still be a sell zone, simply because momentum and trend appear to be quite sharp. And so because the NQ has this crazy bounce style that it has to it, I'm going to look for where the traders just closed up supply, and that's where I'm going to put my sell, right? Remember, the market is there to facilitate trade, and so the way trade gets facilitated is that they collect inventory and then they decide to sell it higher, or they collect inventory and they decide to sell it lower, right? We don't know which way, but what we can tell is, hey, I get the feeling that since they bought and sold right here in this 5-minute area, and then it collapsed, couldn't get above it, but it got above it just a little bit ago. So I don't want to have a ton of risk. I'm going to wait for it right there. Now, that being said, we could still rotate all the way down. My measurement box puts us at the base there, but that's what we're staring down. We're 10 minutes into the day, into the trading day. We should expect buyers to come in here. Why? Who wants to take a gander? Is there a contract change? Not yet. Not yet. Thomas says 24,970 first stop. You know, I am not one to disagree. I think we do have a fade on the horizon. What I believe is going to happen is just what's been happening almost every single day. And it is the traders get in front of themselves in one direction or another, and then they shift and change. So they're overly short, and then they get squeezed, and then they get short again, and then they get squeezed, and then they get short again, and then they get squeezed. So I suspect that will also happen. I would not be surprised to see it completely break down and move in that general direction. I really would not. Let's go look at micro Bitcoin. Okay, so this one, obviously, take a look. 88,000. Now, my target was that 88,400, which is this low on December the 5th. And now it is over here in this 8,700 area. Now, let me delete that and let me show you what's going on with the price action here. We're going to go to 4-hour chart. I am very bearish on Bitcoin for a lot of reasons, but this one particularly, this cycle particularly. So the next line is very sticky, but remember, what we want to do is, where did everybody stop selling and where did everybody stop buying? Your first approach to a chart should be looking at it to try to figure that out. Now, sometimes it's pretty messy, but this chart, we can definitely see that people stopped buying at around 94,600. Where did they stop selling? The last time they stopped selling, where was it? Well, it could be almost right where they're sitting right now in this very noisy patch, or it could be lower, somewhere around here, 86,700. My thought is it's making its way down to that space. Notice, see this box here? This box between 94,000 and 89,000. I'm going to draw a Fibonacci there. Oh, that's hideous. Let's do this. No. All right, we'll leave those, but what I don't want is a background. All right. So here is the price action. It's falling out of this area. So my thought is that it's going to make its way down to the base of the box at about 85,000, right? So here's what we're staring down. It's a gap down. They're stalling out, right? If we go to a 5-minute chart, we can see them stalling out, trying to hold the floor. But notice this, folks, when you're trying to pick a bottom, the last thing you want to see is lower highs and lower lows. Just not the best thing to do, right? Not
Order
the best
filled.
thing to do at all. Ooh, what got filled? All right, let's go here. It is bouncing. Where do we want to put this? In the gap? We'll give it a little bit more room. Right? Put it in the gap. And the goal is that it comes down into the space. Let's see where the NQ is bouncing. Not very much. It's not bouncing like the ES. We could put this one a little bit closer to this edge. Old resistance, new support. And then let's try to set up some other trades. Let's try to set up a Bitcoin trade. All right, notice, what are they trying to do? Hold the floor. Why? Why? We saw it from the 4-hour chart. Here's why. Resistance, resistance, support, resistance, resistance. Blows right through it, and then another area of support. That's where they're bouncing. So for us as traders, What we want to see is we want to watch big money bounce, or bigger money than us. We want that big money to bounce. And then what do we want to see? We want them to recover the price action event. Now, here's the thing. If this chart cannot get up over the close of the first 5-minute candlestick, it's got more downside pressure. Okay? Now, how can you look at what a chart might be doing for yourself at the end of the day? You can look at a 5-minute chart and you can say, okay, I want to go to the highest volume candle and I want to anchor a VWAP here. All right, forget where the anchored VWAP sits. Okay, we want to anchor a VWAP on the highest volume. Look down here, see the volume? The highest volume candlestick is this one right here. And so we anchor the VWAP, and so what do we know? What does an anchored VWAP tell us? Wow, the sun got super bright. The anchored VWAP tells us everyone that bought, if it's above that VWAP, they're in the green in general, the average person. And if it's below that, they're short. And so price action, how did you include volume? What do you mean? Oh, you just go indicators. You just choose volume. TUV, volume, right here in your indicators, right? Okay, let's go to silver. Let's see what's going on there. Dip down from yesterday. Ooh, look at where they tried to hold. Again, folks, if you are having trouble deciding where is it that I put my position on, your answers come from very simple spaces, right? Now, for me, as a trader, I try to be very simple on my own because I get distracted very easily. And so what I have to do is find areas where buyers showed up and where sellers showed up. How do you know when buyers have shown up? Where demand absolutely takes over. Well, you stop seeing prints below, right? And so, let me do this. I do not want any label showing. All right, and so this is what's going on with silver. Now, here's the thing. If silver breaks to the north, it could come to the top of this range. So if you don't watch my morning video, I do a morning video for everyone, and I put it in the VIP pit and a couple of different places. I'll show the latest gamma lines. I'll talk about the rotations, those sorts of things happening. But this kind of event tells you, all right, if I see silver doing something here, the bounces should be sell zones here, folks. They should be, simply because of what the option chains are telling us is going on here. People are not leveraging up into this trade anymore. They are not. And so what happens with these things is they tend to stall out in these kinds of environments, okay? So if your mindset goes, yeah, lady, I hear ya, but I'm going long silver, all I want you to do is think about, okay, I've planned that trade. Where is my stop? Okay? Just think about this from that simple space, because I'm not here to show you that I'm right. I'm here to share with you how I manage risk in my own positions. Okay? And so that's something really, really important for me to share with you because I've been trading live for over 20 years. That's 2 decades. Doesn't that sound really 2 decades? But I've been trading a really, really long time. And what I do know is how to preserve my capital and how to manage my risk, or I would not be here. Okay? So, that being said, if you go, hey, I'm going long, your thought should be, all right, what do I want to see? If it breaks out to the north here, this is the last area at 62.55 for the target upward, and then the potential test of 62.75. What you want to be very careful of is hanging on for a long time with the position because it's got downward flow attached to it. Okay? So, that being said, that's what I wanted to talk about there. Let's go and check out gold. Gold is pretty sideways. What we got going on? Look at the box here. If we just choose the little 5-minute box from days past, what we can see is we can see the traders fighting right here. Now it's got a sticky bottom. So we have that 43.24 where they've come in, but this VWAP is from the FOMC meeting. And this is the low action. Let's do it on the 5-minute. That's the low action event. And if we wanted to see what's the highest volume of the prior trading day to give us our VWAP action, oh crud. Come on, Sally. Okay. We can go from the highest 5-minute volume candle, which is right here. Yeah, that's very interesting. So it's caught in this box, which tells me, hey, if I want to put a position on in gold, it's better that I wait for it to come to the bottom. Okay? Sitting up in that space. So that's what we're staring down there. All right. Questions. Would you be able to touch on ATR? Am I short silver? No, I am not short silver. So I don't use the ATR, but we can talk about it. I am not short silver, and here's why. Right here, I suspect silver is going to bounce and then fail. Why would I not get involved now? Simply because I am staring down price action that is giving me higher lows and higher highs. So why in the world would I want to go short when I see this? I don't. I want to wait for it to collapse and then I'm going to go. That's my thought there. So let's look at an ATR and talk about what that means. So ATR means average true range, and many of our folks in TopstepTV, my great friends of mine, they like to use the ATR. So the ATR, if you have an ATR on a 5-minute chart, it's telling you essentially over the last 14 candles, what's the average range of motion? And it says 15 cents. So 2.5 times that is generally a risk event. You would say, okay, if this thing moves 2.5 times, then it's probably going to have a reflexive motion. Now, some people say 3. It really depends on what the chart's doing. So let's take a look at this. ATR 15 cents. Here's silver. Here's the big wick. The 5-minute chart, it had a high of 62.16, a low of 61.62. So that's 53 cents. So if I go 2.5 ATRs, that's 40 something cents. So obviously you'd probably want to use 3 ATRs for silver. Each candlestick has that relative range of 3 ATRs. That's 45, right? 15 threes are 45. That's a little bit closer to where this is sitting. Just know that once it expands through a very wide ATR, it has a tendency to shift in the other direction, right? If that makes sense. The reason you would look at an ATR, it will tell you if a move is long in the tooth, right? Notice over here, the ATR is much higher. It's 41 cents intraday trading at that ATR. And so the risk associated with candlesticks that are 40, the average ATR is 40 cents, and you have to use 3 ATRs for a move, that's going to be tricky, right? That's going to be very, very tricky for you to hold a trade when your ATR is that wide. And so an ATR will help you establish risk. Who I love, I'm a huge fangirl of D, Market Stalker D. On her show, she talks a lot about the ATR, a lot, and uses it very actively in a system or a strategy event. And so this is more, it's more important that you listen to someone who uses the ATR in a strategy event rather than, something else. Like me, who's saying, all right, well, here's an ATR. Here's statistically what it's supposed to tell you. Some charts move 3 ATR, some charts move 2 ATR. It depends on the volatility of that particular instrument, right? And so I would say it's better to learn from her. All right, so next question. It seems like all of my trades in December have been correct for about 20 minutes. Do you think 1 to 4 is too much to ask for the month, or should I be happy with 1 to 1? Discover, this is a really great commentary. So here's what I know about markets. They shift dramatically. You could be in a very trending event and you can hold your charts for 10 to 1. Let me show you what the current markets are doing. Let's go to the ES. This trade is going back and forth. So we'll see what happens at the top of the range. It's trying to battle against this support ledge. If it holds the ledge, it's going to come back to the top of the box. So we'll see how it goes. I missed, daggone it, look at that. That tick event brought me into where? I might need to hold it here. 275 instead. But it did go all the way down. So, all right. So here's the storyboard. Take a look at what's going on with the ES. Right? So here's our starter event, and here's for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days. If I had bought this chart 15 days ago, I'd be essentially flat. If I had sold these charts 15 days ago, I'd be essentially flat. What does that tell us? It tells us that price action is going nowhere. And if price action is going nowhere, then where we make money are in smaller pockets of time. And because we're making money in smaller pockets of time, the price action won't give us 1 to 4. It might just give us 1 to 1. And so when you're trading and you're thinking to yourself, holy cow, I, you know, my trades are good for 20 minutes and then they go against me. Well, here's why. The price action's very jagged. It's not got trend. And when there is no trend in the market, you cannot use a trending risk to reward event for yourself. You must look at the chart and go, wait a second, where were the sellers and where were the buyers, right? So in the grand scheme of things, if I am staring this down really properly, and that gives me a ton of risk if I open that up, but it is telling me that the sellers for this environment are sitting way up here at 68.36. It could be that we stay under this VWAP, but the trade action is simply wash, rinse, repeat. Wash, rinse, repeat. Up, down, down, up. Up, down, down, up. You're not going to be able to get flow that way. Okay? It's not even that there's a major sell-off. Oh, you're talking about Bitcoin there. Well, how do I answer that? It is kind of a major sell-off since it was printing 120 and then moving in that general direction, downward still. So it is pretty major in my mind, right? 30% is pretty major. So that being said, next question: are you using Mentor Q indicators? I'm using Mentor Q to give me the call walls. We cannot get these indicators here, but I am using them to give me the call walls. So if you're looking for NQ and gold, the 0 DTE call wall, 25,375. 0 DTE put wall, 25,000. Call wall, 24,500. That's what's going on for the NQ. For gold, we have, thanks for all the love, folks. I'm so happy about that. For gold, we are looking at the call walls at 4,400, 4,425, 0 DT put walls, 4,290, put walls, 4,150. And of course, these 0 DTs will get updated in the morning once we get our flows together. And you can see that on the morning video that I do for the folks in Topstep Discord and a couple other places. All right. I am not in the NQ. I have an order waiting in the NQ. My order waiting in the NQ is up here at 25,224. What's the best time frame to look at for ATR? Oh, I'll answer that for you also, Slick Travels. So that depends on how you trade. I know that sounds like a punt, Carvaluce. Yeah. So if you trade the 5-minute, you could use a 5-minute ATR. See, ATR is not meant to be used singularly. It's meant to be used in conjunction with something else. And because I don't use the ATR per se, I have an idea of what an ATR sits around at, right? I'm the kind of simpleton that goes, whoa, those candlesticks are big. I am going to be super careful about trading in the middle of any of those candlesticks. That's my simpleton view of ATR. But if you listen to someone like Deanna, she will say, and there are many others that use that. I know Coach Jay uses it, and a lot of folks do use it. The question then becomes, all right, well, if I have my ATR, how will I use it in a reference perspective? So D is a trader that tends to hold positions for a longer period of time. She's not going to use a 5-minute ATR, right? She might use a daily ATR. So that really has a lot to do with you, okay? Now, someone says, hey, where do you get this anchored VWAP thing? Let me show you. You look to the left of your Topstep screen, and you choose the 1, 2, 3, 4, fifth one down, and you go to volume based, and you choose anchored VWAP. And that's how you do that. Okay? All right. Do you enjoy trading NYSE or London? You know, I gotta tell you, Atlas, I love trading no matter when. The question is the market giving me enough movement that I can make a trade and be happy about it? Or is the market in a space where it's just moving sideways? Right? That really is going to tell me whether I want to trade in one direction or another. Julian says, do you check the VIX to adjust the sizing of your trades on the ES? That's a fantastic question. Now, here's why. The answer to that is no. But here's why that's a good question. When the VIX comes into expiration, because the tradable VIX instrument, the VX, when that expires after the monthly options expiration, it tends to give the market a reflexive shift. So although your question of, hey, do you watch the VIX? I don't watch the VIX to see about my trades in the ES or anything. What I watch for the VIX to do is see when it expires, either before the monthly expiration or after the monthly expiration, because if it expires after, it has a tendency to create a reversal pattern. Now, if we move upward into the end of the month and the VIX turns around and it does something wonky, we're going to see a reversal to the downside. Currently, the VIX is a little bit suppressed, and so that could be the case. Why don't I use the VIX to trade my ES levels? Because all I care about are supply and demand. That's all I care about, right? Now, in hindsight, I would say, you know, I have to tell you, it's super hard trading live and talking about charts, because there's a part of you that goes, hey, I really want to get this position in so that folks can see the execution of it, see how it works, and then understand rotationally what might be going on, right? And so in hindsight, I would say, hey, you know, you expect it to come into all of this heavy congestion. You should have put the sell order way up here. So now it's waiting. We'll see what happens. It's within my risk for this position. I don't really, I mean, I have nothing to worry about here. So we'll just leave it as it is. If you have, wow, you know what, XO, I don't have any idea. I don't have any idea. M's, if you have a re-ranging play, have entries and exits prepared and then adapt. Yes, I would would say that that's a fair assessment, right? If you're looking for a range, now here's the thing about the range. I'm short, Diana. But the better short would really be right where it is at this flat VWAP, or at the top where I have my second entry in at the top of the box. And I'm calling it the top of the box because it's this area. You could turn around and buy it if you like, but it's sitting in a range that's fairly messy. But the question is, when you structure your formations in this marketplace, notice you can do it in a lot of different ways. So first of all, let me delete some of these boxes so that I can show you something else. So what is happening here, right? You can stare this down and go, you know, here is my last 5-minute candlestick formation that had the biggest range. It's this one right here. We've got this 5-minute range. It happened at 3:55, and there it is. See the top of the box? Now, I chose the short at the bottom of the box. My risk should be at the top of the box. Look at how they're rejecting that zone. It's the highest candle volume of the prior day, of Friday. Draw a box around it. Why? Because a lot of people played there, and you want to see where they said, nope, I'm not buying anymore, or nope, I'm not selling anymore, right? We broke the bottom of that. So let me show you this little trick. Let's hope it works. If you clone the size of that candlestick and you move it to the bottom of its range, look at where it happens to come into. Right here at the edge. Now, you might see this slippage. That's, you know, I don't know, people call that a liquidity break, whatever. But that's something that says, hey, if this flow starts lifting from here, now I've got upside pressure. And so you can also clone that one and put it at the top of your 5-minute candlestick formation, which is right there. Right? So it puts the top edge very close to where the price action is sitting easily. What do I want to do here? None. And then let's get these settings right. So that's exactly what we would be staring down. Label background. I don't want one. Okay. There we go. Does that make sense? Helps you understand a little bit about the measured moves that traders are going to get themselves involved in. Could I ask you, how do you put in that percent ticker beneath the price? Oh, with this box, date and price range, that's part of the date and price range tool. You can put that, so you could have your label if you wanted to have a label, and you could remove the background and it would tell you, hey, that's the percentage that it moved in that general space, right? So this is telling us, you see how it's rejecting this area? That's the last 5-minute candlestick on Friday that had the most volume. So if you came in and you said, you know, I have a flat VWAP, I have all this big volume, I'm going to take my short right off that 68.32. Where should it run? First to the middle of the box and then to the bottom of the box. That's how it would work. Does that make sense there? Let the percentage ticker be seen with price. You can only see the percent amount. Oh, you mean this? I don't know. Might have to ask Robert about that. You know, he's the one. Yes, this is right here. Yeah, you'd have to ask Robert about that. I don't have a clue. I don't have a clue. That's almost like fib levels. Yes. Yes. All it is measuring. So here's the thing about fibs, and I want to speak to you as a mathematician, right? Because I did my master's work in statistics, and so I'm very familiar with Fibonacci's and curves. And so here's what I know about traders. Traders are simpletons. I'm not disrespecting myself or anybody else that I love dearly in the game. But we are simpletons. And here's how we do it. We look at a range and we go, let's see if it comes back halfway. Right? Let's see if it comes halfway. And then we go, okay, let's see if it bounces from halfway. If it bounces from halfway, I think I'll take the trade. If it doesn't bounce from halfway, I guess I'll take the trade south so that it goes to 100%. And that's all we do over and over and over again. Whether we use an algorithm to do it, whether we use any kind of, it is such, it's super simple. Doesn't mean that you won't have wicks. Doesn't mean that you won't have slippage in terms of wicks coming way down, but that's about managing risk. Totally different skill set. Understanding these 50% retracements, easy breezy, lemon squeezy. Understanding risk takes more self-control, takes more attention to detail and what's going on in the chart. All right? So the thing is, 50% is not a fib level. It's not a fib number. And so if you're looking for exactness in a fib number, you aren't familiar with how markets work with traders. Because traders aren't looking for 56.4 or 51.8 or whatever. They're looking for 50. And that's about it. Everything in the market, it's not built with a 0.03 pen. It's built with a chubby crayon, right? The little crayon from elementary school that's big and fat. And if you happen to get a bottom, the market gods were just smiling on you that day, right? Because there is no exactness in that space. It's just relative motion. So here we are. Look what's going on here. Somebody talked about silver doing up, right? It's grinding its way to the north, but it's still not giving me any indication that I've got downside pressure here. It's still holding an upside event. For us as traders, we can say, hey, listen, if it comes down here into, oh, for heaven's sakes, if it comes down here into this area, around 62.18, I'll go ahead and buy it. If it doesn't, I won't. Okay, so next one, nat gas, very nice big gap up, holding super steady. Look at where they bounced. This is why it is supremely important to look to the left and draw yourself a box. And what you will notice is the box from over here. You want to look for support, support, resistance, resistance. Okay, going to be support or going to be resistance. So it's gapped up, looks really nice. It's going to have problems up high simply because there's a lot of manipulation going on in energy markets to keep energy prices low. It is just what is happening. Okay. All right, so let's finally take a look at Bitcoin. It's time for us to hit the trail. Seeing that bounce up. There's Bitcoin. Look at it. Here's your storyboard. If you're thinking to yourself, hey, this is my chance, you can say, I'm going to buy it right
Order
here,
filled.
up over the 5 minute. If you want to do that, your stop is at the bottom of the wick at 87, and your first target is the top of that 5 minute space, but it's got to get up and over that level to stay there. Absolutely. And you could also say, hey, I'm going to flatten this out from this space, but you can use that 5 minute for yourself and say, okay, if it gets up over that edge, I'm going to add to the position in a stop buy, and I'm going to take my target up at, I don't know, 89, right? You can just move it through that space. Can you tell us why crude is being suppressed? I'm sorry, Jasmine. I know. Everybody goes, wait, was that me? Crude is being suppressed right now because our administration would like to keep inflation under wraps, and energy input is the biggest component in any kind of any kind of business expansion. So if they keep the prices low, traders are going to be in, companies are going to be in great shape. We'll spend less money at the pump. We'll pay less money to heat our homes, all sorts of things. So they really want to keep inflation down so they can continue to cut rates. All right, yes, the ES looks very strong. Let's wrap here because it is time to go. I've been having so much fun. Notice, where's it likely to go? See the top of the box? All I did was move it to the space, it filled the gap, headed to the top of the box. I'm going to leave this trade right here because I do expect it to collapse off of this zone based on where supply is. And we'll see it move from there. So I'll let you guys know how, well, here's the thing about this EEX. Most companies can't afford to drill when prices are this low. It puts us in a very sticky patch, very, very sticky patch, trying to thread a needle. So that being said, good luck, everybody. I'm glad I got to answer a couple of questions today. I sure hope that you guys have a great trading day. I'll pop up in the Topstep room, let you know how this trade figured out, or actually I'll talk about it in the video tomorrow for us in the morning. All right? Okay, everyone. Take care, and I will see you all on the streams. All the best.